You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again to talk about the landscape of futures options. Yes, it is time for TWIFO, This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. If I sound a little bit different, a little bit under the weather, it's because I am. But I'll be as soon as I hop off the mic on this show, I'm heading pretty much straight to the doctors. But we like you folks. There's another show to get in the can. I don't want to leave you folks holding the bag. So we're going to power through another episode of TWIFO for you here today. That's how much we love you folks here on the network. And of course, if you guys want to go above and beyond, you want to get more of the network in your lives, you want to get access to all of our shows throughout the week live, as well as, of course, pro Q&As and options oddities and giveaways and a whole bunch more. theoptionsinsider.com/prep is the place to go. And let's see who's joining us on the old CME Group and FTSE Russell hot seat today. Pleased to be joined once again by Miss Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, welcome back to the TWIFO program.
Hey, Mark. It's good to be here. Thank you. Sorry to hear you're not feeling well.
Yeah, I'm going to power through. You know, I've done this in the past a few times. I've hosted when not feeling well, so I'll see if the magic of hosting can lift me up and carry me through the rest of the segment. I'm sorry that you have to slum it with me today and not with your buddy Russell. I think he's out chasing tornadoes in South Dakota or something. Yeah, he's storm chasing right now. So I hope he's still alive. I guess we'll find out. All right, but a lot to unpack here, so let's get to it. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, it's time to explore the healing power of futures options. Let's kick it off the way we like to do with our movers and shakers report, where we break down all the big movers to the upside, aka the light side, and to the dark side over there at CME Group. Miss Carley, you know the drill by now. Where should we begin our journey this week?
Let's start with the dark side.
All right, to the dark side we go. Unlike last week, where it was pretty much 5 upside names and everything else on the list was red. I can't recall the last time we've really seen that bias of a chart in one direction. This week, it is much closer to 50-50, but to the dark side, I think you said we go. So let's go off to number 5, soybean oil, out to the beans there, the oil at least, off nearly 10%, 9.93%. Number 4, WTI, man, they're coming for energy this week, off 10.56%. Number 3, SRW wheat, aka Chicago wheat, off 11.6%. Number 2, KC wheat, off 11.86%. And number 1, one of our 3 frequent offenders. If you guess one of these 3, you guess Bitcoin, you guess nat gas or lumber every week, you have a good chance one of those is going to make it on our movers and shakers. This week, it is nat gas, taking the top spot to the dark side, off 15.29%. It was number 3 in the same direction last week. So it's been a couple of weeks now of dark side for nat gas. It was off 13.57% last week. So, man, they have truly come for all things nat gas. It wasn't like that long ago we were talking about it was going to threaten the 10 handle, and now we're talking a 6 handle coming into this week's show. So, man, crazy things afoot. Let's go out to the light side. Let's actually expand it to a number 6 because it's close to a tie for the 5 spot. Number 6 is actually our good friends, the Russell 2000. Just had Catherine on from the Russell 2000 team. Hopefully her team is exploring diligently that June 8th mystery we've all been talking about here on the network. Russell 2000 up this week, up 3.09%. It was number 4 in the other direction last week, off 10.6%. So long way to go to make that back. It's pretty much neck and neck with our number 5, which is the Nikkei Yen, FX. Just in general, FX, and also the international scene, a little bit more on the forefront than it has been in the past. We've actually talked about FX on the show recently, which is kind of fun. Maybe we'll get some FX names. Obviously, the Nikkei, not an FX product, but it is yen denominated, so it does have that FX exposure, 3.13%. Number 4, the E-mini S&P, 3.35%. to the upside. Number 3, the Ultra 30-year bond, up 3.85%. Number 2, another one of our frequent offenders, lumber, up 5.18%. And number 1, with a light side bullet this week, listeners, it is the E-mini NASDAQ, up 5.38%. Carley, I know a lot of our listeners are intrigued by this market and what's going on there, and it is dominating our dark side again this week. So I think we have to start in energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy segment. You guys know where to find this. CMEgroup.com/TWIFO, TWIFO is the place to go. Then get into that drop down. You're going to go there from the top, of course, is ag, because you're going to go down 3 to energy, then over the product family, go down 3 more to nat gas. And that's where we're going to start our journey this week. Carley, a lot going on in the world of energy, in the world of nat gas. What is catching your eye this week, madam?
Sure. It's been an interesting couple of weeks in natural gas. As you mentioned earlier in the show, natural gas was pressing up against $10, not in the not too distant past. And we've taken basically a 40% haircut on the front month. So it's been a pretty wild ride. The fundamental news that triggered this was a fire at an LNG port that basically limits the export capacity of the U.S. I mean, we all know that Europe is desperate for natural gas, and the U.S. has a little more than it needs, at least for now. And so what you're seeing is the fact that if we can't export it, then natural gas prices are way too high. But that lack of exporting capacity is temporary. It will run its course. And I think that will probably keep some sort of a floor under natural gas. In fact, I think somewhere around the $6 area is probably going to hold, at least for now. But it's a wild ride. Natural gas is not for everybody, that's for sure. I think it's also worth pointing out that natural gas was the first commodity to really start having trouble with this LNG port news. We had like 2 mini flash crashes in the course of about a week. And once people started seeing that, hey, maybe commodities don't just go up forever, some of the complacency wore off, and then we started seeing liquidation across the board. The reality was everybody was not, I shouldn't say everybody, but the long commodity trade was wildly overcrowded in many aspects. And so people started to see natural gas crack down, and then eventually crude oil followed, and then the grains, and now we're seeing copper do the same. So perhaps the wild commodity bull market might be coming to a pause or maybe even end. We'll see.
Interesting. Calling a top here, perhaps, on the super hot commodity markets. I know in the past you've been pretty active in the nat gas market. You have upside verticals and ladders. Anything going on in DeCarley in the nat gas market this week?
Sure. Actually, believe it or not, after I just pitched that really bearish scenario, we actually put out a recommendation, or an idea, I should say. I'm using the word recommendation / idea lightly, because most people really should just stay away from natural gas. It's just not for everybody. But with that said, the options are priced pretty nicely to put together a bull call spread with a naked leg. And so one idea would be using the September options. You could consider maybe buying something like a 650, 750 call spread, and then selling a put to pay for it, maybe the 550, 5/4, somewhere in there. There's obviously unlimited risk below the market if something goes wrong, so you want to be really careful with that. But if you give yourself some room for error, 550, 5 1/4, you should have enough time to react, maybe hedge with a mini future, something like that. So hopefully that's doable. But the reasoning is, as I mentioned, we took a 40% haircut on the front month. And if you look at a daily chart, we're in this really wild and expanding volatility range. And the bottom trend line support comes in right about near today's lows. So either we hold or we don't. I think at least in the short run, we hold, and we've got some buyers coming back to the market. And that's simply because, as I mentioned, Europe still needs natural gas. The LNG port's not going to be shut down forever. So there's still a good fundamental story in natural gas. Some of the other commodities are starting to lose their luster, but natural gas, I think, has a chance at another run.
Interesting. Another run in nat gas. Let's see what's going on from an options perspective this week, listeners. A pretty active week, all things considered. About 450,000 contracts on the tape, so a little bit more active, but roughly 10% than we normally see. And of course, we had a truncated trading week, so when you factor that in, it's actually a lot more active out there. Let's go out to the board here, see what it's showing us here. And with nat gas right around 6 1/4 in that front future, we got almost 22% of that 450,000 contracts going up in that contract that goes away in 4 days. This is nat gas trading like an equity these days, which again, you're seeing wild swings out here, so it shouldn't really come as a surprise that people want to play in some near-dated contracts. We're obviously not going to hang out there. Let's go a little bit farther out. Let's go to the August contract. That has 33 days to go. That future right around a 630, so it's a little bit higher. And we're talking, what is the vol right now in nat gas? Remember, it has broken triple digits in the past. Not quite there right now. 64 and about 1/4, off about 5.5 points this week in that August contract. Skew-wise, we had the puts last week, 3.4% cheap. This week, 7% cheap. And then we had the calls, 7.8% rich last week, 6.7%. So coming in a little bit on the calls, coming in a lot on the puts, which is kind of interesting. It may sound counterintuitive. Again, if you move down the skew, you tend to see the puts collapse. But usually if you have an aggressive move, they tend to maintain some of their value. But it seems like people are dumping out of their puts out here this week. Let's see what the active trade was. Maybe we can get a sense for what was going on out here this week. Looks like the most active contract this week was the 6 puts going out this week in that July contract that has 4 days to go. We did 14,200 of those, almost all of that, 8,500 going up today, 4,100 on Tuesday, Wednesday only 1,500. So a whole bunch of 6 puts going out in 4 days are trading today out here. Let's see. And then let's go back out to our August contract, the 10 calls. That was the kind of nearly at the money strike not too long ago on the show. The 10 calls were very active in August this week, listeners, going up 11,500 times. The big day today, 5,300, 4,300 on Tuesday, 2,000 on Wednesday. Looks like most of that closing throughout the week. So folks, seems like they're getting the heck out of Dodge on the 10 strike, whether they were long calls and they decided that's probably a bit of a bridge too far, at least for right now, and getting the heck out of Dodge, or they were short a bunch of those and now buying them back at interesting levels, given the fact that the skew came in a wee bit out there this week, probably leaning more towards the closing on the selling side, but intriguing stuff nonetheless. We also saw action this is an interesting week, listeners. There's kind of action across the board. We have the 20 calls going up in Jan of next year, 6,500 times. 31.95 on Wednesday. That was mostly closing, so they've taken some off maybe. And then 31.95 again today. So interesting. And then looks like the 8 calls and the 7.5 calls were also going up 1,250 times. So 7.5, 8 vertical with a kicker on the 20 strike. We've seen weirder stuff. I know, Carley, you like yourself some, shall we say, interesting ratios to the upside in natural gas. What do you think about the Jan 7.5, 8 1-to-1 vertical, perhaps, or maybe a strip against the 20 calls on looks like an almost 3-to-1 ratio?
Well, I'm just pulling them up right here. The Jan 7.5, 8.
Yes, January, all about the January.
Wow. To be honest, probably not a horrible play. I think that there's probably a decent chance that has some something to it. I just worry about liquidity. Like if you get in, you may not be able to get out until we get a little further down the road and liquidity picks up, but might be worth a shot. I'm not opposed to it. Let's just put it that way.
I had a feeling you might like that one. It just seems like it's up your alley there. So there you go, listeners. Yeah, you're going to be wearing that one for a while. Once you put it on, hopefully you enjoy it because it'll be with you for a while. But if we do see a crazy retracement up to those levels, then there are worse trades certainly you could put on out there. Let's go out. Since we're hanging out in energy right now, we also have to spend some time in our other just downside annihilator this week, which is WTI off 10.5% since our last show. Coming into the show time, it's 104.10, so threatening to break the par strike in the other direction, listeners. So intriguing stuff. Off nearly 4 handles, about 3.6% just this week. Let's see how many contracts we have going up this week. 365,000 contracts. That's almost a regular week's worth of paper. And again, we have a truncated holiday week, so it's a pretty active week, all things considered. And of that, 40% going up in the August contract that has 22 days to go. Carley, I know when you're not looking at nat gas, you look at the rest of the energy complex. What's catching your eye out there in the sticky stuff this week?
Crude oil is at a very interesting crossroads here. We are basically today's low, or around today's low, is basically the uptrend line. So we're at a point where oil either bounces and continues higher or it rolls over. Believe it or not, I'm not quite sure we're done seeing the selling in oil. A lot of people have asked me what's going on in crude oil this week, and the reality is I was asking myself, what the heck is going on in crude oil when it was at 120, 123? That to me seemed a little crazier than 100. I think if you look at a long-term chart, we've rarely seen crude above 100, and it has never been able to hold above 100. And I know there's all kinds of fundamental things going on. I totally get that. But you have to keep in mind the last time we were trading above 100 for any period of time was before fracking. Like prior to 2014, we honestly, the consensus was the world's running out of oil, and $100 oil is just, that's what we've got to deal with. But at this particular time, we aren't necessarily drilling as much in the U.S. as some of us would like to be, but we do at least have that option. We know at some point in the future it could come around and help us out on the supply side. In fact, we're hearing a lot of rumors and also reading a lot of facts about private drillers. Those types of drillers, usually small companies that don't have to answer to shareholders or and the social pressure, are really starting to pick up the pace. And even Harold Hamm is looking to take Continental Resources private so that he can drill without anybody sweating him over the green aspects of it. So in commodities, it never fails. High prices are always the cure for high prices. It's taking a lot longer this time around than we expected, but at some point, that's exactly what's going to happen. So we'll see if crude oil continues to hold 100, we may have one more run in it. But historically, we've seen some really, really big sell-offs in June and July. So you don't want to get complacent or underestimate the ability for crude oil to just completely melt down, even with all these fundamental stories. Those take a back seat when traders are long and they have to get out. And this market has been very long for a long time, complacently long. If traders have to get out, they don't care about what's going on overseas or what the supplies are like. They're selling to get out. It doesn't matter. So just be careful with that.
I like that. High prices are the cure for high prices. I like that.
Yep.
Actually, since you're touching on that right now, before I get into the options activity, I have a question coming into our live chat. Why save it for the feedback segment? Because you're addressing it right now. It comes from Options Queen. She says, why are they coming for energy so aggressively right now when the war is still raging in Ukraine? You were kind of just addressing this, Carley. If you have anything else you want to add, could be on WTI or on nat gas or anything in the energy complex for Options Queen. I'm sure a bunch of our other listeners have a similar question, Carley.
Sure. And I think it's just a liquidation story. That happens in risk assets from time to time. Everything trades as one. Again, fundamentals they really don't matter. Chart support doesn't matter. People are hitting sell because margin calls are coming in. They're getting scared. They're panicking. Whatever the case is, they're selling and everything else is irrelevant. And so that's kind of what you get sometimes in commodities. And I think, as I mentioned before, kind of started with natural gas volatility that eventually bled into oil. Now it's bleeding into some of the other commodities. When margin calls start hitting various areas, it basically bleeds into everything. And so, believe it or not, sometimes energies rolling over can cause the hog and cattle market to roll over for no other reason that people just have to raise cash to pay for margin cover margin, or just to simply get to the sidelines where they feel they're a little safer. So
there you go. Good question. Options Queen. I'm sure a lot of people have similar questions out there. Let's go back to WTI. Let's go to that drop down, listeners. Pop out of energy and pop on over into WTI. You will see, again, 40% of the paper going up this week in the August contract. It has about 22 days to go. We're at about a 104 right now in that AUG future. And the vol here in WTI, about a 48, down about 2.3 points from where it was this time last week. Skew-wise, we had the puts 4.2% bid last week, 3.9% bid this week. So the puts kind of holding firm. The calls last week, 2% cheap. This week, 2.5% cheap. So not a huge evolution skew-wise over the course of the week, which is kind of interesting. Let's go on out to the most active contracts now. I did not expect this strike. The 130 calls in August are leading the dance this week, listeners, with 16,000 contracts. The big day yesterday, 6,400, most of that opening, 5,700 today, and about 4,000 on Tuesday. Those were slightly closing. So 130s. That's interesting. I'm guessing there probably was some vertical action, even though it doesn't line up 1-to-1 nicely here with the 125s, but probably a few verticals sneaking in there. The other most active contract on the week here was the par puts. So that makes a little bit more sense. We are threatening the 100 handle in the other direction. So seeing those par puts lighting it up this week, that's kind of what I expected. The big day for these, by the way, putting up 13,000 contracts this week. The big day Wednesday, 5,600, 4,100 on Tuesday, and 3,100 today. And it looks like slightly closing on Tuesday and mostly opening on Wednesday. So yeah, par puts make sense. The 130s, I did not expect that strike to be on the radar this week. Let's go out to see what else is lighting it up out here this week. Got the 125s going up 10,300 times. Again, these are all pretty much in August. The big day for those was Wednesday, 4,000, 3,500 today, 2,700 on Tuesday. Closing earlier in the week, opening on Wednesday. I seems like that's the case for a lot of these contracts, closing on Tuesday and opening on Wednesday. If that's not optimistic enough for you, we also had almost 10,000, about 9,500 of the SEP 120s going up this week. The big day for those, also Wednesday. Wednesday, a big day for a lot of paper out here in WTI. 5,100 on Wednesday, 2,400 today, 1,900 on Tuesday. So again, slightly closing on Tuesday, opening on Wednesday. So 120 strikes, 130s, all kinds of madness going on out here. Let's go a little farther down and see. Oh, we also had the 140s going up in March. So 130 wasn't optimistic enough for you. We had 1,500 of the 140s. They're actually trading actively all week long. That's kind of interesting. So 140 looks like it might be a 130, 140 vertical, maybe even a 110, 130, 140. Doesn't line up that well on the 110. So definitely 130, 140 vertical here. Yeah, they traded pretty much in lockstep. So 130, 140 vertical. So Carley, find any of that surprising? We got all mostly upside except for the par puts going up this week, as well as a 130, 140 vertical going up in March. Any of that come as a surprise or intrigue you, perhaps?
I'm definitely intrigued. I'm not sure I'm that surprised, just because on the brokerage end of things, I see a lot of speculation on dramatic upswings, and I think that's kind of where we are, or where we were a couple weeks ago. Let's say that, and in commodities, everyone just assumed, there's a war going on, there's tight supplies, there's all of these things that are happening that in theory are bullish for crude oil, but to me it feels like capitulation bullish, that type of situation where everybody just assumes the path of least resistance is always going to be higher and it's impossible for things to sell off. But I think we're overlooking the idea that central banks are basically slamming on the brakes. We have private producers trying to come in and do something. OPEC members, if they do ever get a little more capacity, they're known for breaking their own rules, and so they'll be probably bringing some supply. And also, sounds like Russia's still bringing quite a bit of supply to the marketplace. We just aren't seeing it on paper because it's happening behind the scenes. With all of that said, if I wanted to play the upside in oil, I don't think spending $200-300 on an option is a bad way to do it. At least you can sleep at night. Any other type of oil participation probably causes a little bit of stress. So I get it. Nothing wrong with having a flyer out there just in case something weird happens.
Yeah, certainly better than riding a crude down to, who knows, 80, right. 75 again, whatever the heck the next leg down, if it Correct. Happens, where that takes us. Speaking of where things take us, the show is taking us into equities land next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the world of equities. Get out of that drop down, pop out of energy. You're going to go down one to equity indices and then go to U.S. Index E-mini. We're going to be hanging out there. Carley, obviously a lot going on the equity front. We just had Mr. Powell. Looks like he's wrapped up his talks now because the markets are starting to trend in one direction. It seems like it's mostly positive on the day after kind of a bit of a interesting up and down latter couple sessions, mostly up kind of week. Interesting stuff. What's catching your eye out there in the world of equities this week?
Well, the thing that I've got my eye on is I'm looking at weekly and monthly charts, because once we start when volatility gets this out of hand and traders are accustomed to selling rallies as opposed to what we've seen the last couple of years, which was buying dips. Sometimes it's hard to get out of those habits. And I think that it's a good idea to look at weekly and monthly charts just to kind of see what the really big picture is and see what it truly is possible. To me, it feels like, there's some glimmers of hope here, and maybe inflation coming down. We're seeing crude oil and natural gas roll over along with grains. That's going to help things out. And, we're seeing interest rates stabilize, so that's all good news. But the reality is traders have gotten into the habit of selling rallies. And so I don't think we're quite done on the downside. But if you look at a weekly and monthly chart, it seems like somewhere around 3,550, 3,500 is probably a good place for anybody that happens to be lucky enough to have money on the sidelines and waiting for a bullish opportunity. Could probably look at doing something there without a whole lot of downside risk, in my opinion. But then again, you just never know, where the picking tops and bottoms is a tough game. So, but I've got my eye on 3,500. I think we will see it. If we do get there, I think it's an opportunity for the bulls. In the meantime, it's going to be really choppy as we kind of work our way down. On the flip side, if we break above 3,900 in the S&P, I'd say maybe I'm wrong and we actually maybe have seen the bottom, but I don't think that's quite in the cards yet. But then again, this has been a crazy year. So
that it has. We have a question of the week about your buy-in levels in the S&P. Maybe we'll get to that a little bit later in the feedback segment, listeners. I have to set the table from a vol perspective coming into showtime. We had RVX, so the VIX of the Russell 2000 at about a 35.40. That puts it down about 2.4 points from where it was this time last week. VIX itself below the 30 handle, 29.40 when we kicked off the show, down a little over 3, almost 3.2 points. VVIX 99.20, down 13 points. VolQ 33.5, down nearly 4 from last week. That means that VIX to RVX spread right around a 6. That puts it about 3/4 of a point wider than last week. And VIX to VolQ at about exactly a 4. That's about 2/3 of a point tighter than where it was last week. Speaking of last week, we had Catherine Yoshimoto on the show talking about all things Russell Recon. As you'll recall, there are some key dates still ahead of us. We have June 24th, so Friday. That's the Recon is final. That's the big day. That's when it closes and goes official after the close of the market. And of course, on Monday, 27th, we reopen with all the newly reconstituted Russell indexes there. If you want to hear the data on what was going on, what are some of the changes, because the Russell Recon usually highlights some interesting trends about what's going on in the broad market. Talked about all of that last week. Make sure if you missed last week's show, check it out. Just head on over to FTSE Russell. They have all that stuff available for you there as well. Speaking of the Russell, let's get into the Russell 2000 here. Pretty active week, given the fact that we had a truncated holiday week this week. We're closing in on 15,000 contracts, which again, doesn't sound like a lot, but we're missing a day out there this week. In terms of where the Russell 2000 is right now, just a tick below 1,700, 1,698.5 right now. It's up 33.5 handles on the week, or about 2% just since Monday's session. Of course, if we go back all the way to last week's show, it's up a little over 3, about 3.1% on the week. And in terms of action, refreshingly, it's not all front freaking week and contract. It's actually looks like the week 3 July contract that has 22 days to go did about 25% of the paper this week. By the way, vol out here, 33.25. So that lines up pretty nicely with the RVX, a couple of points difference out there. In terms of skew, last week the puts 10.2% bid, this week 10.5% bid. The calls last week 8.2% cheap, this week 8.5% cheap. And in terms of the action, one of the most active contract was this week. It was back to that front contract that has 1 day to go. 1640 puts. So these are obviously almost 50 handle out of the money puts, 60 handles actually. These are traded over 1,100 times this week. The big day was Wednesday, and as well as about almost 500 going up just today. So they're opening pretty much all week on these 1640 puts. Given what we've seen in other major indices like the S&P, E-mini and stuff, I'm going to have to guess this is probably premium harvesting. A lot of people like to do very near-dated out-of-the-money premium harvesting. We used to call this on the floor kind of picking up nickels in front of the steamroller, but folks are doing it. They're doing it en masse in the S&P. They're doing it here, it looks like, in the Russell 2000 as well. So good luck with that. That trade works until it doesn't. So as long as you have that plan in place, and these are actually fairly close, 50 handles. We see people going out all kinds of different ranges to harvest their premium out here. But this week, the 1640 puts taking the lion's share of the business this week. We've got time for probably one more segment before we get into the feedback, listeners. So, Carley, what other complex is catching your eye this week?
I've got my eye on treasuries. That's been pretty interesting the last couple of weeks. Interesting is another word for frightening.
All
so
right,
that's what I'm looking at.
We can go out to the rates next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, get into that drop down, pop out of equities. You're going to go almost to the bottom, one notch above the bottom, to interest rates. And you're going to go into the product family of U.S. rates. I selected the 10-year, but you could pick your poison. A lot of things going on. Maybe Carley has a different area of the yield curve that is catching your eye. Carley, what is catching your eye out there in the world of rates this week?
Well, for full disclosure, I've been probably about as wrong on rates this year as I possibly could have been. I was right in anticipating some turmoil in equities. And in my mind, that made me think treasuries would benefit. And as it turns out, it was the complete opposite.
Why would you think such an insane thing? Who would think
I know. It's unbelievable. So just leave it to me to mess something up like that. But I do think, like, is in my experience over the last couple of months of being long and wrong and hedging and suffering a little bit, it does really feel like last week was just capitulation. I mean, we had the Fed meeting, we had at time crude oil was in the 120s, so it looked like inflation was just run rampant, and maybe that still is the story. But anyway, it just felt like capitulation selling in treasuries a week and a half ago. And so far, we've had a nice little run from the lows. We're not out of the woods yet. If you happen to be bullish, or if you're bearish, there might be some hope for you. For we're coming up against some resistance levels. But if we start breaking these downtrend lines in treasuries, I have a feeling it's going to be one of those rip your face off rallies, because we've simply had a situation where everyone was short, everyone was bearish, everyone had liquidated treasuries out of their portfolios. And so mom and pop investors are underweight. And at some point, that money's probably going to flow back in, not only for safety purposes, because let's face it, there's a lot of crazy things going on out there. But now treasuries are actually paying a little bit of yield. So people get paid to wait, and they have a safety hedge or a flight to quality hedge. And so I think we're going to see some money finally flow into treasuries here in the next several months. Also, the seasonal bottom was earlier this week. So seasonally, treasuries are supported as well. So I don't see any reason to hold them down here. But then again, I thought that weeks ago, and it's just been one of those relentless trends. So we'll see how it goes.
Obviously, there's a lot of different places to play on the yield curve. Seems like people have their sweet spots that they like to hang out. Where do you typically like to play on the yield curve, Carley?
I think for most retail speculators, a good place to be is the 10-year note, because it gives you, it's a little duration, but not too much duration. And the options are cheap enough that if you want to just simply be an option buyer, you can buy some nicely positioned options without spending a fortune and having a lot of risk on the table. Likewise, if you're trading futures and hedging with long calls and puts, you can do that affordably. So I think the 10-year note's a really good place for most speculators to be.
It's like we're on the same wavelength. They already have the 10-year up in front of me here, Carley. Let's go out there to the 10-year listeners. Again, a pretty active product, no slouch here. 2.4 million contracts on an already holiday truncated week. So nothing to sneeze at out there. Where is the 10-year right now? 117.215 in that front future, up about 1.15 or about 1.3% just since Monday's session. Obviously, whenever the Fed's out there holding court, you can expect maybe a little bit of turbulence out there in the Treasury space. And of that 2.4 million contracts, we have 35.6% of that going up in the August contract that has 29 days to go. So we're going to hang out there, listeners. What is the vol, such as it is on the 10-year? Remember, you don't really come to the rates outside of some areas of the Eurodollar. You don't really come to the rates for vol because it's an 8.32 right now, off almost half a point. That's a lot of vol coming in on the rates when you're already starting off below a 9 and losing nearly half a point. Of course, obviously people were pricing in a little bit of juice with Powell this week, and that coming off after his testimony, it seems like. In terms of skew, we had the puts last week, 4.8% bid. This week, catching a bit of a lift, 6.9% bid. So that's a pretty big swing. Again, we're starting from a lower baseline there. We're only starting from 8.3%. So it's not like you're talking about an equity with a 30%. You're talking a big premium on top of that. So bear that in mind. And then we had the calls last week, 2.4% cheap. This week, double that, 4.8% cheap. So they're coming for the calls, giving a little bit of juice to the puts. Interesting stuff out here. In terms of what was leading the dance out here this week, it was the August 118 even calls. That's where the lion's share of the paper, nearly 100,000 contracts just in these 118 calls. So again, put that in some context. That's going to beat, it's going to beat silver. It's going to beat lean hogs. It's going to beat, you might put all those together. You throw in, it's going to Russell 2000, a few others. It's a pretty active contract. And that's just the 118 calls. So it's a lot of paper, listeners. The big dog today, everyone waiting for Powell, and then diving in 73,000 contracts of the 100,000 going up today. 22,000 yesterday. Actually, both days, and only 4,300 on Tuesday, both days were kind of slightly opening or closing. So it seemed like there was a lot of just back and forth churn on the 118 strike, which is interesting. Again, we're not that far away from that strike, so perhaps not that surprising. It's close to an at-the-money strike, so seen a lot of back and forth paper on a Fed talking week. Perhaps not super shocking, but still interesting, just the size of it alone. Followed by the 115 puts, also out there in August, doing 97,500. So neck and neck out there. And these, unlike the 118s, which is pretty much all today, these traded almost exactly even every day this week. 31,800 on Tuesday, 32,900 on Wednesday, 32,600 today. Most of that earlier in the week was opening. Today, obviously, we don't know. So, wow, even action on the 115 puts pretty much every day this week. That's interesting, to put it mildly out here. Let's jump around a little bit, see if we see any other aberrant paper. Lighting it up a little bit closer to home, the 114 puts going out in the day. 68,000 of those bad boys are lighting it up. 114 seems to be an interesting strike because also we have 68,000 of the 114 puts going out in about 8 days. So maybe a bit of a roll on the tape there. Let's see. 114 puts are also going out in 8 days are also pretty active all week long. For them, the big day was Wednesday, 37,000 on Wednesday, 26,000 today. Actually kind of light on Monday, only 1,100, but still a lot of opening action on the 114 puts. Let's go check really quickly. That front contract, was that a roll? Actually, no, they were opening most of that on Tuesday. There was no Monday this week. Tuesday, 66,000 going up on Tuesday. So pretty much the entire week traded on Tuesday, and all of that was opening. So opening, the contract that goes out in one day. That's why I like the futures options. You don't typically see that in the equity options. But in the world of futures options, folks will pile into a contract with a day to go without much reticence at all. And I never have reticence about welcoming you folks onto the show. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback. I did it. I almost survived the full show, listeners, fighting through just to get you guys your content before I head out to get checked out. All right, let's see what's going on this week. We have our question of the week this week. We're asking you right now, over 40% of our audience said they were waiting until SPX hit 37.5 before starting to buy the dip. Now that we've hit that level and indeed bounced below it, are you buying back in or waiting for lower levels? Gave you three choices. You're back in, you're waiting for lower levels, or you never got out. Carley, what are your thoughts? You mentioned your level before. I think it was 35.50 or 34.50, somewhere around them. So I'm guessing you're going to vote for waiting for lower levels. And then what do you think our audience is voting for?
I'd say probably 50-50.
50-50 for half are not in and half are waiting for lower levels.
Correct.
We actually threw a curveball. We actually threw a third choice and said, I never got out. So those folks are in there as well. You're actually close on one. Waiting for lower levels, 56%. Then we got 23% for you're back in. So some of the people are starting to dip their toes in at these levels. And then sadly, 21.2% of you said you never got out. So I feel for you folks out there, obviously, one of the things we like to talk about on this network is that you use options to ride the elevator up, but you don't have to ride it all the way back down again. So hopefully you folks are getting a little bit more active out there. This goes until pretty much after vol views tomorrow. So if you're listening on the podcast, you will have time to play along out there. We also asked you guys and gals about crypto. Crypto didn't make it on the list this week, even though it wasn't on our, surprisingly, it's one of the few weeks where Bitcoin did not make it into the movers and shakers. Got annihilated last week. I think it needs to take a bit of a breather. But our question of the week was the crypto bloodbath this week. Makes it a good time to revisit this question. Quite simply, which level will Bitcoin hit first? Didn't have a crypto rundown this week because we were off for the Monday holiday, so we will pay this one off here instead. 10,000 or 50,000. Which one will we hit first? And apparently the hodlers are getting the heck out of Dodge. Only 26.6% of you said 50K. The rest, 73.4% of you, chose 10,000 first. Carley, we didn't get a chance to talk about crypto. Are you still getting a lot of inquiries about crypto over there at DeCarley in the wake of this sell-off, or has that kind of tampened down interest a little bit?
It's mostly died down. So I think people are losing interest, which actually I'm not necessarily a crypto expert. Actually, in fact, I'm not a crypto expert at all. So don't put too much weight into what I say. But with that said, when people are really starting to lose interest like that, is actually as a contrarian at heart, it's probably when I start getting a little bit interested. So we'll see what it does. I mean, just from a strict chart perspective, I think that there's a decent chance we start finding some support levels here around the 20,000. Of course, has nothing to do with fundamentals or anything like that. That's just strictly charts. So if we can hold, let's say, above 17,000, I think we've got a chance at maybe turning the corner, at least for now. And I think maybe that'll lure some of those FOMO buyers back in, because just looking at the tape, I'm guessing there's just been massive and painful liquidation, and those people are going to feel bad if prices start bouncing back, and they'll start chasing prices higher without probably a whole lot of regard to what that price is. So it's going to be interesting. Sounds
like I'm hearing DeCarley dipping their toes in the crypto waters a little bit here.
Well, I'm on the sidelines, and I'll probably stay there. I like to watch from the sidelines because, to be perfectly frank, I didn't believe in Bitcoin at 4,000, and I didn't believe it at 60,000. So I'm just not the person to ask about this particular asset, but we'll see how it goes.
Sounds like our audience is with you. They're fading it all the way down to 10K and perhaps below. All right, listeners, that music means I survived a bit of a truncated TWIFO out here this week. But glad we get able to get you guys some content here as I'm dragging my way into the end of the show. We love you folks here. Make sure you guys get all your episodes, come hell or high water. We're like the postal service here. Nothing's going to stop us from getting you your shows. And DeCarley, I appreciate you joining me on the show today to help carry me through my malaise here. Before we go, if folks want to check out your books or what you guys have offering over there in the world of DeCarley, where should they go? What should they do?
Sure. So the best place to find us is DeCarleyTrading.com. It's spelled DeCarley trading.com. We are a boutique brokerage shop. We provide services from discount online to full service, and we write a lot of educational material. So if you go to Amazon and search for Carley Garner, you'll find our books.
There you go, DeCarley Trading, or search for Carley Garner, Carley. Listeners, by the way, Carley Garner, Garner. Look for them on Amazon. You can find them in all those fun places. And of course, you know where to go to check out our TWIFO reports, cmegroup.com/TWIFO. Because we like you folks, they're available for free for you guys there all the time, 24/7. If you want to check lean hogs at 3 a.m. on Sunday night, we won't judge. Have at it. Get in there while the getting's good, cmegroup.com/TWIFO. And of course, Recon, the big day is upon us tomorrow. Listeners, where can you go to arm yourselves with all the best data, the breakaway levels, the interesting analysis that's coming out of this year's Recon, and a whole bunch more? FTSE Russell, FTSERussell.com is the place to go. Give them a follow on the old Twitters as well, at FTSE Russell, all one word. That's going to do it for us today, and barring some dire turn in my health tomorrow, we'll be back again tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. And then after that, let's see how I'm feeling. Hopefully we'll get you an oddities. If not, maybe I'll force the Rock Lobster to go solo. But we'll get you an oddities one way or the other out there. And then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.